Good afternoon, everyone. It is Thursday, August 31st. Going to do a little quick market view here, what happened in October, kind of what we're seeing with interest rates and the dollar, kind of just give our perspective on where we're at and one opportunity that we're kind of watching here. So let's take a quick look. So this first chart I want to show you is of the U.S. 10-year Treasury yield. You can see I've got this little purple window here at the top just to kind of show this range we've been in for the last close to a year. Rates kind of peaked here in late October, pulled back down, and then we've come back up. A lot of people were trying to call for this to be a double top. You can see we've got, well, that didn't work very well. We've got a top up here and a top up here. This is commonly called a double top, and expect like a bigger reversal. I'm looking at the bottom side of the 10-year Treasury here. You can see that we peaked here, right? And then now we're about here. So this is a big moment, okay? Is this level, which was formerly resistance, right? The market was resistant to go higher here in March and also in July. Is it now going to be support? Meaning that those prices, a lot of the times, resistance prices eventually turn into support pricing. So is this going to be a moment where the market actually, the 10-year actually finds support here and then comes back to the top? No one really knows, but we got to monitor this level very closely. If we do see the 10-year break below 4, that's going to be our signal to get out of these short-term bonds that we've been in for quite a while now and move into these longer-term bonds. Remember, interest rates come down, the value of bonds go up. This is also going to be a positive for risk assets. So think smaller companies, more growth-oriented companies. So those would be some shifts that we would be looking to take. Now, ultimately, what this means over the longer term is it would signal that the economy is weakening in some sense. If they have to bring interest rates down, if the 10-year comes down, it would be primarily the thought of a weaker economy. So getting into riskier assets for the growth potential of declining rates can come back to get you if this weakening turns into a recession, no matter how severe. So this is a huge moment in time right now for Treasury yields. This increase in rates, or this run back up to the top, if you will, this chart's of the 30-year mortgage rate. Crazy, hit an average high of, what is that, 7.24, 7.25 on a 30-year mortgage is crazy. We're at 7.18. So the way to think about this is these mortgage rates are just really tightening the economy. It's creating this big crunch. Anyone purchasing a home, refinancing their home, like money is going to be tight for them because they're buying at 7% interest versus, some folks were getting sub 3 just 2 years ago. So this is really weighing on the market right now. Seeing the 30-year roll over, if interest rates also go down, is going to be an opportunity for folks out there to refinance their mortgage to lower their monthly payment, but also maybe spark a little bit more buying in the market as well. So this would be a secondary impact if we do see the 10-year come back down. The one that we're looking at here pretty closely, you've been hearing me talk about the dollar for probably 18 months now. The dollar going up, I'll zoom out, the dollar going up here, 2021 through, most of 2022, really heavily weighed on the markets, as well as emerging markets and international markets. When the dollar is powerful, countries outside the U.S. really suffer because the exchange rates really hurt them. So obviously the dollar has rolled over to kind of help the market spark this rally we've seen here in 2023. Now, as I zoom back in, the interesting thing is this purple line is the 200-day moving average, often seen as a long-term barometer of the trend of a general market. So you can see that we have now gotten back over the 200-day. Not only did we get over it, but we came back down and retested it down here. So we've touched it here the last 2 days, and now we've kind of bounced off of it. So if the 200-day now turns into support and we see that 200-day I'll see if I can draw a smidge more. If we see that purple line, continue to move down and flatten out, if it starts to curve back up, now we've got this longer term trend going back up. If the dollar starts to head back higher, that is going to be a headwind or a risk for stocks, and more specifically, those risk assets we just talked about with the 10-year going down. If the dollar goes up, that would be the exact opposite. It would not be a positive for them. Just looking quickly at the S&P 500 here, we've had this purple line drawn for a long time. It was, as you can see, it was resistance, back here in August of 2022. That's when the market made that final push lower. Now you can see over here, it acted as support here in June on a little pullback, and then it acted as support again here in mid-August, and we've seen this little rally. So if we zoom in over here, we're ahead of all the major averages. Here's the 200-day, the 100-day, the 50-day. We're heading back towards those highs. The biggest question is going to be, can we get to those highs and break through them? That, I believe, is going to be a challenge. The biggest thing we're looking at here is momentum. I can't really draw this line over here because it hasn't made a peak, but we're going to be following this pretty closely. This bottom chart, I'll make it a little bigger, is relative strength, the momentum indicator. Anytime we're above 60, we're in this bullish territory. Below 40, we're in a bearish territory. We're hovering really close to being under this 60. Seeing this relative strength get above 60, which is right here, is going to be critical to say, hey, this little pullback was just a minor pullback. Market is charging higher. If it does not get above that level 60, if it rolls back down, that's going to be an indicator that, the momentum behind this bull market we've had here in 2023 might be fading, and we could be looking at coming back down to the lows back down here, and possibly even moving below them. So a lot's going to happen over the next couple days, maybe even a week or two, to determine, are we going back to the highs? Are we going above the highs? Is momentum going to fade? It'll be an interesting couple of weeks. But where we've been. We're a little bit on the bearish side after this big run. We're a little underweight on our equity positions, looking for a bigger pullback than what we've got, possibly down here into the 4,200 level. I can draw a little line here. We'd be looking at something down here to signal, a bigger opportunity to get a little bit more bullish and buy more stocks in our portfolios. The last little idea, one thing we're looking at, we've had multiple research partners mention to keep an eye on China. So obviously the news is really negative out of China right now, but that's typically when you want to buy, right? When people are so pessimistic is typically when there's opportunity. It has to be done carefully. Maybe go back to that dollar. We need the dollar to roll over and go down. That's going to be a positive for emerging markets like China. You can see we've been in this huge drawdown. This is a China index of companies that trade in the in the U.S. markets. And we've just been moving sideways here since March of 2022, just sideways, sideways, sideways. But if we zoom in, all of these moving averages, right, the 50, the 100, and the 200 days have all flattened out. Zoom in a smidge. They've all kind of flattened out and are trying to move higher. So if we get the opportunity where these indexes are moving higher, the dollar's coming down, China's pumping stimulus into their country right now because of the slowdown. Anytime you see a country putting stimulus into their economy, that's a good look. We've seen that in the U.S. several times over the last 15 years, and it's worked out really well. So some of our research partners have told us to keep an eye on that. We're going to wait for a little bit more signal from them, but we think the risk reward setup is there. We can go in and make a purchase today, throw in a stop loss order here at the red line, protect us to the downside. It's just something we're looking at. Not saying we're going to do that, but something to monitor. We could see some good growth here. Now, back to that momentum indicator I've been seeing, you can see down here, we've got a pretty good increase in momentum via that red line I just saw. So things are shifting, things are changing on these most recent pullbacks. We haven't got below 40 on relative strength, which I've told you is typically when we get into that bear market territory. So we got it over here, then we've rebounded, we've pulled back down, but we're not getting bearish readings on momentum. So we'll definitely be monitoring that one. If we can see that dollar break, I'll flip back to the dollar chart. If that dollar comes back and breaks through the 200-day moving average, and it looks like we might be heading down here, that is going to be a positive sign for emerging markets. And we'll look at the opportunity here in China and all emerging markets for that matter a little bit more closely. So that is what I have for you today. Appreciate your time. If you have any questions or concerns, give us a holler. If you want any information or want me to take a look at a chart or an index or bonds or anything of interest, comment below or shoot us an email. We'd be happy to do that. Hope you all have a great rest of your week and an awesome September, and we will talk to you all very soon.